What's up, guys? On this episode of Full Signal, we have a very special guest with Dan Ives. He is the most sought-after technology analyst in the world, and he laid out his bull case for AI, his exact message to bears right now who are doubting his thesis, and the technology names he's watching right now. This is a must-listen episode, and I hope you enjoy this conversation. Dan, you have been calling this the new 1995 AI revolution all year, but a lot of people are getting concerned right now. Walk us through why you're still bullish.
I mean, look, it just comes down, we are in, call it 2-3% into what's going to be an AI revolution. You know, it's my view, it started off as a 1995 moment. It's now a 1996 moment. Look, we're just at the enterprise. We're just the pieces where you're building out infrastructure, LLMs, data centers. Use cases are just starting with Palantir and others. The consumer piece hasn't even started yet. Autonomous hasn't even started. Robotics. See, the point is, like, it's my view, you're year 3 into an 8 to 10 year build out. But the reality is, like, look, the bears the last 20 years, they missed every transformational tech growth stock, you know, over decades, focus on valuation. The issue is that the bears in their spreadsheets, when they're in hibernation mode, they can't see AI in the spreadsheets.
That's, can't see AI in the spreadsheets. Something that you do, which is the opposite of that, you're traveling all around the world, you're going to factories, you're talking to the people building the actual AI infrastructure. What are you learning on those trips that you think maybe are not showing up in earnings?
Well, I think it's actually, they are showing up, right? In other words, if you actually look at the number, look, it speaks to my view. Look, over 3 million air miles the last 25 years, right? Like, it's always easy to call stocks 25th floor of New York City office building or sitting there on Metro North. It's a lot different to see it, the fabs, see what you're seeing in terms of spending in Asia, across the world, what you're seeing in the Middle East, what production looks like, what demand looks like. And it speaks to our view, like, demand to supply for NVIDIA chips are 12 to 1. So to sit here and say bubble and use some mathematical gymnastics to, you know, create some sort of conspiracy theory, that's fine because it just creates more opportunities to own these names. And our whole view from the beginning, when we started calling it the AI revolution back in, you know, late 22, it's Jensen, the godfather of AI, was going to change the world, but you needed a spark. The spark was Microsoft OpenAI, the $10 billion, January 2023. That was it. But well, Phil, the point is, like, my whole career, going back to late 90s, like, you're always, what makes a stock, you're going to have bulls and bears. You're going to have, but look, the haters hate. I get it. But the reality is we have 2 more years of this tech bull market. And the bears will continue to see that when they're hibernating in their caves.
What do you wish the bears could see along the supply chain or in the factory floors? What are you seeing that you think that they're not getting?
I wish the bears could understand that 60 to 70% of data has never been able to be accessed by companies. Now it can. I wish the bears understood that use cases, maybe there were less than 10, call it a year ago. Now you have over 80 in terms on the enterprise. I wish the bears could actually be at a Palantir user event to understand what companies are doing. I wish the bears could actually see what the demand looks like for NVIDIA chips to understand the scale and scope of this. And, you know, in terms of like circular financing and all that, it's like, look, if it was 1950 and you're in Vegas and you're in desert and someone's like, okay, I'm going to build Las Vegas here, they'd laugh. They say the same thing about Dubai 25 years ago. But it comes down to, like, my whole career, 2008, Apple's going to be a 1-year cycle with AT&T. 2014, Tesla. There's no way the concept of electric vehicle is ever going to work. Nadella takes over Microsoft 2014. Come on, this is an old legacy company. There's no way they're going to transform into, you know, into cloud that Microsoft's done. NVIDIA, same thing. Why not spend on gaming 2021, 2022 instead of AI? It speaks to the view where you have to understand where technology is going rather than getting caught up sometimes in the narrative. But look, it's the reality of this market, but it speaks to my view. Like, the fundamental research we do gives us the confidence that there's not an AI bubble. And that's why, like, that's sort of been our thesis, right? Over the years.
So I know you're running the 30 stock ETF, the Ives ETF. Can you walk us through how you select those names to get entry into this fund?
Look, in the Ives AI 30, the Ives ETF, it's really focused on 2023, 2024. No matter where in the world, I walk into me and be like, own Palantir, Microsoft, NVIDIA, and then you could walk out and get lunch. But then the reality is, like, now the whole reason we created the ETF, it's all about second, third, fourth derivatives of AI, software, cybersecurity, infrastructure, energy. Where else on the chip side in terms of the supply chain? That to me is the key. Because so many investors, whether it's institutional or retail, whether in Australia or New York, doesn't matter. They're like, how do I play AI? It speaks to my view, like, these are the 30 names we view as the core AI winners, but that will continue to evolve and change, over the coming years. And that's why it's a living organism.
And are you making these calls based on, let's say, proprietary data or valuation metrics, or using traditional measures? Like, how do you go about that?
It's data that I'm looking at in the field. It's like, why is CrowdStrike an AI name? Why was Palantir obviously one of the cores? People remember, like, you go back a few years ago, Palantir, junior high school, 12-year-old, people are laughing, right? Then all of a sudden they're saying it's too expensive at 50, 75, 100, 150. Keep it going. Like, it's trying to identify the winners before it plays out, but then also understand how it changes. Like, if you look like Nebius, CoreWeave, GE Vernova, Energy, Aqua, like, it's trying to understand, like, where as it continues to evolve, how it's going to change in terms of the theme.
So I know you have talked a bunch about the chips, NVIDIA. What are some of these second and third order effects that you're trying to bet on?
I mean, to me, it's like in use cases, like, it's not just about Palantir, it's MongoDB, Snowflake. Can Salesforce turn around? Like, how could they monetize when it comes to, AI? When you look at, what I view as like cybersecurity, that's going to be a huge area in terms of CrowdStrike, Zscaler, Palo Alto. Then it's like neoclouds. You look at Nebius, you look at like the energy side, names like GE Vernova and others, the consumer side with Roblox and obviously Meta leading that. How does Apple play into this? It speaks to my view, like, we are early days to where this is going. As someone like myself that's covered tech going back to late 90s, like, when I say, like, it's not a bubble, like, that's just not me, like, reading about it. It's like living it. And to compare and contrast where we were, late 90s, to today. That's why it's 1996 moment, not a 1999, 2000 bubble moment. But look, like, this started off, like we said, it's like AI party, start off 9 p.m., 10:30 p.m. Party goes to 4 a.m. The bears will watch it through the windows, looking into the party, saying it doesn't even look that fun in there. At the end of the day, 6 a.m., Bulls and Bears meet up at the diner. Bulls had a lot better night than the Bears.
Bulls are buying breakfast.
Bulls are buying breakfast. But look, it's like, that's the work, that's the way we do it. We're not someone that is so valuation centric that it clouds my view of where things are going. If I think NVIDIA earnings could go up versus Street 25, 30, 35% above where Street is today, is stock cheap? Yeah. I mean, I think that's why it's also important. The opportunities are created in these cycles, but the white knuckle moments create the opportunities.
So to press you on valuations a little bit, Palantir has a wild valuation. I think its PE is 350 something. If someone points to that and says, how could you buy this stock right now? And most institutions, I would say, take that view where retail investors are very bullish on it still. How do you wrap your head around that?
Sure, I think, and it's a great question. I think, like, with the transformational growth, tech growth themes, you can't just look at it over the course of 1-2 years. You have to look at it for the next 3, 4, 5 years and where it's going. Because I think that's how we looked at like Amazon back in the day, Alphabet, Tesla, never viewed as a car company, it was disruptive tech. That to me is the best way to view it. So let's just say Palantir. When commercial business goes from, let's say where it was, 25 million, to when I believe it's going to be 2 to 3 billion. What's the margins in the business? Next 4 or 5. What's a DCF on that bit? Like I could argue, on the sum of the parts, Palantir will be a $1 trillion company next 2, 3, 4 years. But you don't see that in the valuation today.
It seems like that's being reflected in the stock price, though, because it's being bid up so much and it's rallied so much this year. Maybe the market is trying to price that $1 trillion valuation.
I think trying to price it. And then like when you have these moments like stock sell-off after a quarter, circular financing, just different work, Burry and some of the other things, that to me, I wouldn't say it's like near-term noise, but also it's like you're betting on the CEOs. Like when you're in NVIDIA, you're betting on Godfather of AI Jensen. With AMD, you're betting on Lisa Su. You're betting on Sundar with Google, and that obviously is playing out for itself. With Carp, Palantir, you're betting on Carp. You're betting on Musk. Like, I mean, that is also something where the strong are getting stronger. And for the first time in 30 years, U.S. is ahead of China when it comes to tech.
Yeah, if you invest on visionaries, I think that's, it's proven out very well over recent years. The big red flag that I hear a lot about, people write to me all the time about circular financing, and you just mentioned it. Is there anything in that concerns you about, okay, you got the money from here going to there and it's just being passed back and forth on the same balance sheets?
So if I gave you $1 and I knew I was going to get $12 to $15 from you over the coming 4 or 5 years, I'll make that bet. So when it comes to like NVIDIA, what they're doing, when it comes to OpenAI, they're putting stakes in the ground, recognizing you only have 3% of companies in the US that have gone down the AI path. Europe, 0. Asia ex-China, minimal. Middle East, just starting sovereigns. Like that's the view. You have to have a view where it's like collaboratively you're building out a new economy. Now look, people are like, oh, DSO's going up with it. Oh, build. The reality is that you look at these companies in terms of where this growth's going. I have no questions that these companies not just going to pay their bills. This is just the early days. You're just talking about big tech CapEx, $600 billion next year. You haven't even talked about the rest of companies around the world that are going after this. So I just think when it comes to like circular financing, it's nowhere different. It's like massively different than vendor financing, 90s that I was there for. You cannot compare apples to oranges.
Is there anything you're seeing in today's market that gives you maybe bad flashbacks to the 90s?
There are companies that like maybe build themselves as like AI 40 times in a PowerPoint on conference calls, where a lot of that maybe it's not true AI, right? Those are maybe posers or, ultimately like the losers in sort of AI. So I do think like you have to be careful on private and public discerning who the winners are. But Phil, it's the whole reason we have our ETF and the Ives AI 30. Like, who are the winners? That's what we spend all of our time doing. So I'm not saying that there's not froth in some areas, but the reality is that like we're early days in terms of where this is going. That's why I think like tech bull market next 1-2 years that we continue to see, just because of how early this all is in terms of playing out. I mean, is my like autonomous going to be 20% of vehicles in the next 4 or 5 years? Robots, humanoid robots, that's going to be something like we're going to see in household, in factories. So I think that's the reality of how we like to think about it versus like an AI bubble, just to say that without ever actually getting on an airplane and being in Asia.
I agree with you. I think the bubble comparisons are actually quite lazy intellectually, and
no,
Yeah, it makes it's a very easy comparison to draw just because it was a revolutionary tech cycle at the time. And today it's, as you say, these companies are totally different. And it's just a different boom.
But also it's like, it would be no different like snake bitten, right? It would be like someone that was like in like a car accident, right? And then like every time like, you're going to get into another car. It's going to happen again. The reality is like, look, we all lived dot-com bubble burst, financial crisis. But I think when you say intellectually lazy, but I would just, in another way, it's very easy to just draw comparisons. But when you understand what's happening, it's a true fourth industrial revolution. Like that's the reality of what's happening here. Is like it, and again, for the first time in like 30 years, US is ahead of China when it comes to tech. And I think that's like extremely important to understand. And like when I'm like around the world, maybe before it was like own 15, 20% US stocks. Now, 40, 50%. Maybe in someone, 60, 70%. And I think that's the reality. Like to play AI, you still have to play China. US tech continues to be front and center.
What do you make of this huge data center build out and people comparing that specifically to the fiber optic cable build out?
Because the difference back then, it's a great like point. If you go back then, you were building fiber optics out, but you didn't have the demand that was ever gonna get there. Today, it's the opposite. Like in other words, if you look at use cases on enterprise and what use cases are going to be on the consumer, there's more active, if you look at it like today, like more data centers are under construction than active data centers. But this is not building out, and then all of a sudden it's like building out a hotel in Vegas, no one comes. It's the opposite. It's like demand is accelerating. But why is demand accelerating? Because companies see it. I'd say consumer-facing companies see it, where it's going to go. And I think that is something where it needs to prove itself out to the point where everyone's like, okay, CapEx, when am I going to see the ROI? Meta, look what's happened to that stock since they announced like the increase in CapEx. But it's an AI arms race. That's what these companies need to do to stay ahead. Because look, Apple hasn't participated. Now you could argue like, okay, Apple's playing the long game. They have the install. I disagree. I think like it was a strategic mistake. They should have brought Perplexity at the time. Now they're going to have to aggressively partner with Google, Alphabet. You know, when it comes to Google Gemini, that's going to be their AI strategy.
Google's been unbelievable in recent months, and people were betting on it to not win.
6 months ago, New York City cab driver was bearish on Google. Like the most hated big tech name across the board.
Why do you think that is?
It goes back to like, AI is going to kill search. They're going to get broken up. Again, better chance of me playing the NFL and that happening. There was also a view like, okay, like, you know, they're on the wrong side of AI. Everyone's taking their market share. But the most AI engineers in the world are at Google today. So what happened? DOJ lost the breakup thing, done. Gives them a huge sort of runway to do anything they really want from acquisitions, Apple and others in terms of partnership. Query, and we talked about it, like, you know, going back to last year, early, queries was going up on search. It's bullish for Google. I'm not saying AI is not a headwind in areas, but now with Gemini, take it to a tailwind. Look what's happening with Broadcom. I mean, like, to me, that's like a good example of if you get too caught up in the narrative and you don't do your own work, you miss them.
You know, I tested the new Gemini this weekend. It is unbelievable.
It's off the charts.
I could not believe how fast it was, how much better the image generator was. Honestly, it blew away OpenAI's models, and I was very, very impressed.
But at one point, like, look, back was against the wall. They messed up. It became a red tape, almost run like a, you know, motor vehicle or whatever for a while in terms of But then guess what? Like, they got religion. Sundar really changed. You know, a lot of the culture changes. what you've seen there occurring on Google, on GCP in terms of what's happened there. And it's rallied. But it's like they're on the offensive, not defensive.
Real quick, we'll get right back to the interview. Just wanted to pop in and say, if you like this content, I write a newsletter every single morning called Opening Bell Daily. I cover macro, the stock market, asset prices, why things are going up, why they're going down. And if you want to get that for free, you can sign up at the link in the description. Let's get back to the interview. When you think about new technologies, emerging technologies, even something like AI agents, or some of these tangential use cases, or maybe quantum, how do you decide what new technologies are worth betting on?
But it's not me. I'm talking people 10 times smarter than me. Like, what are the users saying? What are companies doing? Can it scale? Is it real? Is it credible? Is sales cycles changing? That's what I look at. And that's why it's one where it's very easy in this market to get caught up in narratives. So I've always just felt very comfortable. I do my own work. We have a very strong ecosystem. Traveling around the world, it gives you a much different perspective, both with, I'd say like companies, private, public, but also in terms of like investors. I think you have like a very good sense when you're meeting with investors all around the world. It gives you a different perspective than sometimes like more of like a bubble feel being here.
That makes sense. There's a lot of, let's say, armchair analysts that I know they're not traveling around the world, and they have equally as strong views as you do, even though you're the one traveling around the world.
And they could be super smart. Like the thing is, like, I talk to bears as much as I do bulls. I'm not one. That's what I'm like. I'm not one to be like, they're wrong. I take all information to understand. I want to understand the other narrative. And there are times where like they can be right in certain names. But it's my view, like that's why we do so much work. That's why we spend so much time on the road, to give me the confidence when stocks sell off that you're not just like, you gotta buy names, no, because you have the confidence, the work that you've done to tell investors this is the time to own names.
Yeah, I know you work extremely hard. When you are looking at your ETF, the stocks that you're holding, what has to happen for you to decide you're taking one out?
And we do have we'll do it 4 times a year in terms of like some come in, some come out. A lot of it is like, is there a technology change, execution? Are there other companies that maybe are above, where they are? Has it played out? Like if a stock's gone from X to Y and it was in there, like is from an upside perspective, is that sort of capped here? I think that to me, like those are all considerations that we look at with like taking companies out as well as bringing new companies in. So
a few months ago in June, you and I had another conversation and I asked you for your highest conviction stock pick for the next 12 months. Said if you could only pick one, your pick was NVIDIA. It's since up 30%. Is that still your pick today?
I mean, I'd say today it's been more high, of course, but hyperscalers. I mean, to me, it's like, I think Microsoft, Amazon, Google, Alphabet's really been our top pick, from a large cap perspective. But I think Microsoft's the one here, way dislocated since earnings. What's happened with that stock? That's the one where I view that as much more of a table pounder here, along with Meta, given what those stocks have done post-quarter.
So to be clear, you see Meta and Microsoft with the most upside right now?
Right here. Yeah. I mean, I think those are the ones on large cap. Those are the ones that are table pounders.
What do you think of, let's say, a more bearish view? People say, look, Microsoft's exposure to OpenAI is a risk to the stock. How would you rebut that?
That I'd say like that's like eating too much Peter Luger's steak. No, I'm saying, I mean, I mean, the point is like, I view it as like that is something where it's a great thing. Like, it's like, I want more exposure to OpenAI. Altman, OpenAI are foundational to the AI revolution. To say that you want less exposure, to me makes no sense. So I view it as like, I get now like the near term, like circular financing, it's almost like an overhang. It's just like Oracle. Let's see how that plays out 6, 9, 12 months from now here. And I believe it's going to play out very bullish for Microsoft. And also, guess what? If Nadella is flying the plane, I'm in 3A drinking Cabernet, watching Netflix, feeling really good. But the look, it just comes down to like, I think it's one where it's very easy sometimes, just like DeepSeek. Oh, this is it. That weekend right away, we're like, oh my God, this is fake. Like this is not real. Like they use NVIDIA hardware and add 2 commas to what they said that they actually spent. Now it took time for it to play out, right? No one talks about it anymore. But those are the opportunities, even though at that time, it's like, oh, this is it, but it's over, AI.
Yeah, it was a big scare to the market. One of the biggest jolts we've seen in tech.
But that creates the opportunities. And that's why, that's always, and I think like investors that have followed us for decades, like that's always our thesis, right? It's like, if we do the work, we feel very comfortable when there's certain panic. Look, people need us, not when stocks are going up and to the right. My Shih Tzu Terrier could do that. It's when stocks are falling apart, the white knuckle moment, nervous, the bears come out they come out of their basements, hibernation mode, put on the bow ties, the whole thing. To me, it's like, that's where like people need hand holding.
Yeah, it's times of panic. Essentially, you need the
of course,
guidance.
But that's how like we've defined our career in times of panic. I think that's how we build our reputation in those times.
Totally. Can you explain a bit about what your work is with Eightco, which is tied to Sam Altman's WorldCoin? Yeah,
so public, I'm a chairman, Eightco, Orbs. And Orbs and Sam Altman, he created WorldCoin along with Alex, his partner. And look, fundamentally, I mean, even though we're a DAT, okay, in terms like we buy World as a treasury, the reality is that we're much more of an AI tech play. I mean, I view human proof authentication, the Orbs, essentially iris scanning technology. That's going to be the future when it comes to AI. You are going to need human proof authentication. And that's what we're doing at Orbs. But our thing, we're, Infinity by Orbs, like we're building out an enterprise solution set. This is something where I'm very passionate to make sure that I'm not just watching from the stands. I'm on the field helping do it. And that's everything that we're doing at Orbs. Like we feel like we are going to play a major role along with Tools for Humanity and our partners in terms of authentication on the enterprise.
Do you think that there are other competitors in this space that are worth watching?
Look, I mean, any authentication player could be a competitor. I think what's going to separate us, it's human proof. Because in the future, it's not just going to be able to say Phil, Dan, Jane, whatever. Okay, I'm me. In a robotic world, AI, it creates so much success and so much, unbelievable things. But the negative is like, there's going to be fakes, bots. What's real? How do you know what's real? And I think that's the future. Now, look, it's something where today, has it proven itself out yet with so many enterprise deals? Not yet, even though like Kraken, Coinbase, and other deals that we've done. But I believe the future, we're just starting to where I think this is all heading.
Okay, Dan, where can people find your work online?
Yeah, so, they can find it posted on social media, X, at Ives Tech. I'm on LinkedIn. You get my email. And look, like we're pretty like we're transparent. Like what I talk about here, if you saw me on the street, I'd say the same thing. Like that's sort of who we are. But I just keep going back to, like, it's the fourth industrial revolution. It's a great time to be living, but it's also huge opportunities for investors. And just like if you always listen to the haters, you'll be in the right lane going 45 miles an hour. I would rather be much more, instead of being in the minivan right lane, I'd rather be in the left lane, a Ferrari going 100 miles an hour, owning tech. Granted, you're going to get a speeding ticket here and there, tech sell-offs, but I think tech is going to be the leader in this market.
Dan Ives, thank you for joining us.
Thank you. Thanks.